Joining us now is Miller Value Partners Chairman and CIO Bill Miller III. Also joining us, his son, Bill Miller IV, who is currently the portfolio manager of the Miller Income Fund, but he will soon be taking ownership of the Miller Value Partners later this year. Gentlemen, it's great to have you on. Good afternoon. And I definitely want to talk about the succession story a little bit later, but we've got a nice rally here. So maybe I'll start with you, Bill Miller III, on the market, celebrating lower wage growth, weaker services number, and this idea that inflation is falling, but we're not necessarily barreling into some big recession. Is that what you think the story of 2023 will be? How do you look at it?
Sarah, I think basically that it's been all about macro for the past year or so. It's been about the Fed. The markets tend to have days where 95% of the S&P is up and other days 95% is down. I don't spend any time thinking about where the market's going to be or where it's going to go. I'm just trying to figure out if there are cheap names out there, names we think looking at a year, 2 or 3, that we can do quite well in. And I do think in this market that is absolutely the case.
So more opportunities for you after what was a pretty rough year last year. Where do you see the most value? Are there certain sectors or pockets of the markets, or it's just individual names for you as always?
Well, the market's like a giant Rorschach test. Everybody sees what they want to see in it. For us, I think it's a lot like, or for me anyway, I think it's a lot like 1939 when John Templeton, who founded the Templeton Growth Funds. So in 1939, when Hitler invaded Poland, John borrowed $300 and told his broker to buy he was in his 20s, to buy every stock in the New York Stock Exchange that traded for $1 or less. And he did that, and that was the basis for his fortune. And more than 30 of those names were in bankruptcy, but only 4 actually ended up worthless. And I think right now it's pretty much, if you look at Burton Malkiel's Random Walk Down Wall Street, I think if you throw 15 darts at the market right now, I think you're going to do quite fine if your time horizon is a year and a half or so.
What about you, Bill IV? I'll say, coming off of a year like last year, where all the focus was about higher inflation and the Federal Reserve raising rates. I know you guys aren't necessarily macro, but in such a macro market, how do you view the opportunities this year?
Well, I think it's really interesting to start with the market's expectation for things and then look where there may be opportunities within that. So if you look at actually what the bond market has done over the past few months, their expectations for inflation moving forward are pretty clustered over the next 2, 3, 5, 10, 20 years between 2 to 3% annualized over the next 2 years. So people aren't really paying attention to some of the more near-term data that's coming out around annualized numbers over the past month. What have prices done over the past month? Well, when you actually annualize that, we're getting pretty close to 2%. So the Fed's done a really good job with the forward communication in terms of getting the market to figure out what's going on. Macro-wise, we're in a great environment. Low unemployment, growth overall, economy's growing strongly, and some really compelling valuations out there. So when I look around, one of my favorite names personally is Chico's, the women's retailer. They also own White House Black Market, Soma. Phenomenal management team. They're undergoing a big turnaround. They trade at less than 3 times our estimate of normalized cash flow. So we have a position in our income fund, even though they're not currently paying a dividend. We think they may eventually, but at the same time, it's an incredibly cheap stock, and there's a lot of others out there like it.